call it strategic metals, metals that are strategic for the global economy going forward. We invest in the battery metal sector, the base metal sector, the uranium sector, as well as the precious metal sector. John mentioned earlier we have a bias right now to precious metals, and this really came about because it was the most oversold sector. Even though the gold and silver prices were moving up, there was a natural negative bias towards the sector, and we're seeing really good value in the sector compared to the value that we could recognize in the base metal sector at the time, or the uranium sector, even the base battery metals, where we find a lot of very good value right now. But we don't think we're near a turning point as far as investor sentiment is concerned. We run a highly active fund. We keep 98 to 100% invested at all times, and we can't move between these sectors depending on the valuations. John also mentioned we focus on the mid caps and the developers, but it's not that small of a market cap. On average, the market cap in the portfolio is above $2.1 billion. So it's not, we don't invest in companies below $250 million market cap, for example. And we have a great discipline when it comes to looking at companies and deciding whether to invest or not. What comes into our screen when we look at these companies. We like low price to net asset value companies, low price to cash flow companies, and very importantly, we like the companies where we can see a lot of upside that is not baked into the share prices at this stage. And we keep a very focused fund in order to be on top of these companies and to conduct the site visits, to update it with all the news coming out. We really just keep a portfolio of 36 companies in the